Hi guys, it's Mrs. Balance Sheet. It's been a long day. I am still at work, but I'm wrapping up and heading home soon. But I wanted to talk about a topic, actually a question that I've been asked a lot, and a couple of people sent me messages um, asking me this question based on another video that I did. And that video, if you haven't checked it out, you can go check it out. But the title of that video is How to Get a $10,000 Refund. But somebody, when I explained how to get a $10,000 tax refund in the video, I also mentioned that I would not want it. And that's what this video is about. I'm going to talk to you about why getting a $10,000 tax refund may seem good, but it's not good. And I'm going to try to break it down to you in layman's terms. So, the technical part of it is that when you're getting a $10,000 tax refund, think about the word refund. A refund means that you are getting something back that you already paid. So, it's basically you paid this money to the government, or you were supposed to get this money all throughout the year. And now, when you file your tax return, you're getting it at the end of the year. So, when you think about $10,000, okay, let me break it down for you. If you get paid twice a month, and that will equal 26 pay periods um, throughout the year. If you were getting that $10,000 on each pay period, like you should have been, you would have gotten an extra $385 each pay period. Yeah. I mean, when you think about it like that, that really puts things into perspective because me personally, I like to make my money work for me. I like to invest. I like to put my money in places where it's going to grow. So I would have rather take that 385 and put it wherever I want to put it instead of waiting until the end of the year for the government to give me my money back. So that is what I mean when I say that I would not want a $10,000 tax refund. And that goes for people who receive the earned income credit as well, even though you're not paying anything into the government. But if you know you qualify for the earned income credit, and this basically means like you get basically a $10,000 refund like year after year consecutively, you also can go ahead and adjust your W-4, your exemptions, to claim that money throughout the year. So they will give you what they call advance payments. So you would get the same 385, each pay period. So that's what I mean. And I'm going to put it in layman's terms for you guys. So I'm going to really break it down. So, just in case you didn't get it. But imagine you have a friend who in January, your friend comes to you and your friend is like, can I borrow $1,000? So you go ahead and you give your friend the $1,000, right? Okay. Now you think your friend is going to pay you back, the next pay period. That doesn't happen. The next pay period. That doesn't happen. The next pay period. It doesn't happen. So December rolls around and your friend takes $1,000 and put it in an envelope, maybe even a card, puts it in a card and returns your $1,000 to you with no interest now. Just gives you back your $1,000 that you borrowed to your friend in January. Now, I'm not going to be ecstatic. I'm going to be like, I will say thank you because that's the polite thing to do. Thank you for returning my money a year later, with no interest. Basically, your friend is the government. What your friend did to you is what the government does when you get a tax refund. So the best thing to do is to do tax planning and analysis so that you can get as much money throughout the year as you're supposed to versus waiting until the end of the year. So that's something, to think about. And if you haven't seen my previous video about how to get a $10,000 tax refund, go ahead and watch that, because after you watch that video, then this video, will probably make a lot more sense to you. But thanks for watching. If you have any topics that you'd like me to discuss relating to finance or taxes, please leave a comment below or send me a message and I'll be happy to answer it. Thanks for watching.